Good morning, ladies and gentlemen. I'm Kritika, moderator for the conference call. We welcome you all to Q3FY22 conference call of Kriti Industries Limited, hosted by Aditya Birla Money. This conference call may contain forward-looking statements about the company, which are based on the belief, opinion, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is recorded. I would now like to hand over the floor to Mr. Sumit Shah from Aditya Birla Money. Thank you, and over to you, sir.
Thank you, and good morning, everyone. On behalf of Aditya Birla Money, we welcome you all to the Q3 FY22 earnings conference call of Kriti Industries Limited. From the management side, today we have the Chairman and MD, Mr. Shiv Singh Mehta, and the Group CFO, Mr. Shashank Belkhede. So without much delay, I hand over the floor to the management for opening remarks, followed by the interactive Q&A session. Thank you, and over to you, sir.
Good morning, everyone. And I would like to thank Sumit for the introduction and welcome to everyone to Kriti Industries earnings call for the third quarter of financial year 2022. Before I begin, I would like to wish you and your family a very happy new year, and I hope you and your families are keeping safe and well. Let me give you a brief overview of the operational performance of the company for the quarter under review. Last quarter was one of the most challenging quarters. It was deeply impacted by regular and excessive rain and consumers' belief of price adjustments. During the quarter, the uptrend in PVC prices continued only till middle of October 21, and when they reached rupees 160 per kg, after which they began to decline, and there was sharp and continuous correction. Prices currently are ruling around 130 level. The sharp downward volatility in the PVC prices negatively impacted demand and margins for all PVC products. Additionally, the regular rains almost obviated needs for irrigation during the quarter in Madhya Pradesh and Rajasthan, where the company maintains a leadership position. This hugely impacted our sales. Despite dismal performance of agriculture products, the other products like building products and micro irrigation products improved marginally. On the capex front, KIL is on course of planned investment of around 30 crores in the new capacities and the new product lines, which will be commercialized in Q1 financial year 23. The company is completing its range of products in building products and column pipe segment, as it intends to grow in these segments. They are non-cyclic of demand, and going forward, company plans to expand its market where it has already made successful entry. Now I hand over the call to our CFO, Mr. Shashank Belkhede, to give you a financial highlights.
Thank you very much, Chairman, sir, and good morning to everybody. Let me take you through the key financial performance of our company on a consolidated basis for the third quarter of financial year 2022. On a consolidated basis in Q3 FY22, the operating income for the quarter was 119 crore, which was a decrease of approximately 46% on Y-on basis, and it was an increase of 6% on quarter-on-quarter basis. The operating EBITDA reported was about 10 crore rupees, which was the decrease of about 66% on a year-on-year basis and 20% on a quarter-on-quarter basis. Operating EBITDA margin stood at 8.24%, which was a decrease of 267 basis points on quarter-on-quarter basis. The net profit after tax reported was about 4 crore rupees, which was a decrease of about 77% on YOY basis and 26% on QOQ basis. While the PAT margins were at 3.45%, which was a decrease of 143 basis points on a quarter-on-quarter basis. If you look at the performance of the 9 months on consolidated basis for the period ended December FY22, the operating income for the period was 386 crore rupees, which was a decrease of approximately 17% on year-on-year basis. The operating EBITDA reported was 36 crore rupees, which was a decrease of about 33% on year-on-year basis. Operating EBITDA margins stood at 9.26%. Net profit after tax reported was 22 crore rupees, which was a decrease of about 27% on YOY basis, while the PAT margins were 5.68%, which was a decrease of 78 basis points on a year-on-year basis. So thank you very much. And with this, we can now open this floor for question and answer session. And I now hand it over to the operator, please, to carry it further. Thank you so much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Rahul Jain from Kriti Industries. Please go ahead.
Hello. Thanks for the opportunity. Sir, with regards to the business side, both on the agri and building products, we do understand on the rural side issues with regards to extended rainfall. Considering now that our presence is much higher in, say, Maharashtra and the other states down on the south, Telangana, Karnataka. So how do we look on the growth side in terms of volumes on both agri side and building products? Because building products also, the volumes have actually gone down on a quarter-on-quarter basis as well as year-on-year basis. Year-on-year basis, though it is just a marginal slip, but even on quarter-on-quarter basis, building products have gone down. So if you could share some details as to what has happened in building products also with regards to this quarter-on-quarter degrowth, and how do we look forward in both these divisions in the coming days?
Yes. Can I go ahead?
Yes, sir. Sure.
Yeah. So what you have asked is about, let me talk about building product first, and then I'll come to agri. Building product, as you all know, we have committed ourselves to expanding range, and the molds and the infrastructure development is absolutely on course. And it would be by first quarter of the coming year, that is year 22-23, that all the equipment, machineries, molds will be commissioned. So you would see the impact of building product when our entire equipment and machineries are able to commission their operations. So building product, we are seeing good response generally from all the markets we have gone. And in the existing markets where there was a heavy rains and there was a definite price pressure because of the downwards movement of resin prices, the impact was seen in terms of not seeing growth in these areas. But our dealership is expanding, and we are quite hopeful that we will be able to achieve much better businesses as things look positive. As far as agriculture is concerned, yes, this was one of the worst quarters in last many years, what we have seen. Because of sustained rain, the need for irrigation pipes had come down, and anticipation of price going down and being a historically high at 160, there was a demand destruction as well as delay in the trading channels for procurement of material. So we are quite hopeful with the all initiatives and company's brand positioning. Since we are maintaining a good market share, we will see a demand revival. This is what is our anticipation.
Are we seeing some green shoots now? So, sir, have we seen
Yes, already we are seeing. Yes, we are seeing positive trends in the coming months, months now and going forward. Already that since the prices have already stabilized and there was a positive price movement also, as you must be aware, in resin market in last couple of days. So we are seeing the green shoots very clearly.
So my next question is with regards to this capex of 30 crores which you have mentioned in your initial remarks and also in the presentation. I assume that this will be completely for our building product segment. So with this capex, 2-3 things. One, can we say that we would be completing our range of products and SKUs which are required in this segment? And typically with this capex, what kind of asset turn which we can generate on this capex, and are we ready in terms of, or how do we plan to scale up the distribution network and the sales team in coming 2-3 months with this new capacity coming up somewhere in the Q1 of next year?
Regarding capex is on stream. As per our plans, we are getting most of the equipment in place before end of March or first week of April, including molds and machines. Number two, what you said, we are targeting, as I have been maintaining, up to 3-story building or 4-story building. For that, our entire range will be ready by the time we are launching our businesses in this segment. We are already seeing that whatever limited range we had, we are finding there is a good response from market. So we are quite hopeful that the beginning Q1 of financial year 22-23, we should be able to see beginning of a momentum in this particular vertical.
So is the distribution network? Yes, and sir, with regards to the distribution and the sales, what kind of additions are completed and what are we planning in the next 2-3 months?
Yes, we are already working on distribution network. We have already appointed some initial distribution in different states, and we are on course as per our plan, and we should be ready with our distribution network by the time production is commissioned.
Sure. Thank you so much, sir. I'll come back in the queue in case of any further questions. And wish you all the best, sir. Thank you so much.
Thank you so much.
Thank you.
And all the more we need good wishes from all of you at these trying times as we have gone through.
Sure, sir. Our wishes are always there, sir. Thanks.
Right. Thank you so much.
Thank you, sir. Next question comes from Devanand Desai from Turtle Capital. Please go ahead.
Hi, sir. Good morning. Sir, the first question is continuation of the earlier participant's question. So, sir, can you give us some ballpark number that with this 30 crore capex that we are doing, what kind of incremental revenue can be generated? And also, if you can talk a bit about the sales team expansion and the marketing team expansion, new hiring, etc., for the building product segment.
I'll answer the second question again first. Regarding hiring of sales team, that work is almost completed. We have already hired most of the people at different locations wherever we want to expand and grow our business. The reason for hiring people early is that we are ready and we are preparing the groundwork so that we are ready with market activities when the production commences in our unit, which will be in the first quarter. And since we have limited range available already, so the placement of product will be done from now till March end. So when in April we are ready with the full range of products, we'll be ready to feed the market as per our plans. Regarding CapEx, it's absolutely on schedule. Whatever is the bar chart prepared for the CapEx plan is being adhered to. Have I answered both your questions?
Yeah, my question is that this 30 crore CapEx, if you can quantify what is the incremental capacity in terms of metric tons of the PVC side, on PVC side, that it will result into, or revenue number, that you are targeting from this CapEx?
You see, this CapEx will be mainly for building material and submersible section. So the incremental sales will not be that high as will be the value-added sales. So you can say about 150 crores will be the total additional sales which we can anticipate from this particular investment. But these are the value-added products mainly we are focusing on. Yeah.
Okay. And you think that you can utilize this capacity in next 18 months or so? Is that something which you are aiming for?
This is exactly what we intend, and that's how we have planned, that we should be able to utilize this capacity within that space of time.
Okay, great, sir. Sir, second question is on the agri side. So, we have been tracking a lot of, PVC pipes companies, and almost everybody has faced a challenging time, and, everybody commentary is talking about destocking in the channel, because of the volatility in the PVC resin prices. So are you expecting any kind of a restocking benefit to come through us in this quarter and the next quarter? If you can, share your thoughts on that.
You see, you will appreciate that when the prices were going up and then they suddenly came down, and the sales were down, so everyone had to take a definitely hit in terms of material valuation at which you have and the material at which you are now having material prices in the market. So there has to be a trading hit to the companies. But going forward, what we see, if the prices stabilize, as they have shown indication that they are already going up in the international market or firming up to little extent in the international market. So we see that there should be a positivity both from the angle of trading position or in terms of demand from the customer. As such, beginning March till May is a very aggressive market season for agriculture products.
Okay. But has the inventory in the channel come down substantially? Is that what your assessment is?
Inventory has come down significantly, but still there is a room for inventory correction and improvement.
Okay. And sir, my last question is, so I think last year we did around 2,500 metric ton in the building products, and probably this year 9 months around 1,800 metric tons. So we are almost flat in spite of our focus on building products being there for last 1.5 years. So is it because of the capacity constraint? Is it because of the product range being not available? Or is it that we are feeding the market and it's taking time? Can you elaborate on that?
You see, first is our limited product range. Because any building product business needs the full scale and full range. Without that, it is difficult, because buying one company product for certain segment of a building material and complementing it with some other company becomes difficult for a customer. So that is our major constraint. That's why the range is first requirement to really be effective in sales and marketing and distribution. So that is the first constraint. Secondly, in the limited range, you have certain molds which are not able to give you the quantum of output, which are critical molds. So unless you have adequate capacity of those molds, the parallel material will not be make the complete family of products. So these were the two constraints which we are facing. And as soon as we are able to have the range as well as the capacities and critical components adequately available, the whole basket will grow faster.
Okay. Got it, sir. Great. I have more questions, but I'll come back in. Thank you.
Thank you, sir. Next question comes from Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, I was looking at the numbers of the company in terms of volume. So in 9 months, we have had almost 40% decline in our volumes compared to last year. So can you give a sense on how has been the industry volumes in terms of agri segment?
You see, for industry exact volumes for me to give you is very difficult. But as you know, the first quarter we were deeply impacted because of COVID.
Yeah.
Which was a major decline for the entire industry. And again, the quarter three, our quarter one and quarter three are the most robust months for the business in agri cycle. And our quarter one was lost out due to COVID. And quarter three, again, we are seeing the extended rains, and particularly in the areas of our working. We are very strong in Madhya Pradesh, Rajasthan, parts of Maharashtra. That is the eastern Maharashtra area. So this is where the maximum continuous regular rains impacted the market demand. Because of two reasons, as I have said earlier, anticipation of price correction and reduced irrigational requirement due to regular timely rainfall, which crops never required irrigation. So this is why this impact. So whole entire industry has felt the difference in terms of decline in demand, but area specific the variances could be there. Like our sales in certain southern states where we have started have not declined that much as they have declined in central portion of our sales.
Sure. And sir, last 2 years, including this one, have been pretty challenging for agri pipes. The prices have moved up, COVID impacted demand. So, FY23 will almost be a third year where, last 2 years have been very much impacted because of, the various reasons. So do you see FY23 might see some restocking as well as demand coming back on the agri side?
You see, that is our anticipation. That's what we feel, that because ultimately basic demand cannot disappear for agriculture. It can be delayed, it can be postponed, but it has to come. One. Number two, prices have already corrected from 160 level to 130. So there will be more rationale in terms of buying at these prices for an average buyer as compared to what he has been facing for last 6 to 7 months. We are hopeful. Let's see how it pans out.
Sure. And sir, can you talk about the initiatives for increasing our presence in certain states like Karnataka, Andhra, Telangana, and Tamil Nadu? And how has been our distribution, increase in distributorship in these regions? Because if we see the number of distributors dealers has remained around 438 on agri side for past 2-3 quarters. So have we increased any distributors in this market?
Yes, as we said that our effort to expand our footprint across has been very religiously we are working. In a last question I had answered that we have already brought in the team in place and the team is working in various areas, and we have already appointed some new dealers in the territories where we want to expand. So we heard about few dealers coming up in southern markets, including Karnataka. But the exact dealer appointment and actual business transacted continuously for a couple of months really makes a dealer active. So I would say that we have already appointed and we are on the course. And as our product range gets expanded, we are sure that these dealers will help us to increase our presence in these markets.
Sure, sir. Sir, any plan, what are our plans for dealer addition on agri and building product side for FY23?
No, we are certainly looking to expand our dealer base. We have got the numbers also planned out area-wise, and our teams are moving around. By March end, we would have appointed quite a few dealers. We are already, as I was explaining, we have already appointed some dealers in these states, and they have started picking up some material from us on a regular basis. But actually, once they continuously buy for you 3 to 4 months, an exclusive arrangement is really translated into real living, then we can say that we have a strong dealership in these states.
Sure. Okay. Thank you so much. I'll come back.
Thank you, sir. Next question comes from Rajat Sethia from iThought. Please go ahead.
Hi, thanks. Sir, in terms of distribution network, how many dealers do we have in our key states and how many dealers do we have outside those key states?
Exact numbers I would not have in front of me, but we have about 400 and odd dealers earlier, and we have appointed about 25-30 dealers in last 2 months in the new areas where we want to expand, like Karnataka, Gujarat, UP, Telangana. So we have already appointed, and other dealers we are under discussion. Our team is already in place who are trying to develop our dealership in these states, as we will be ready in first quarter of next year with our expanded capacity. So we want to complete this process at least significantly before we commence our production.
Okay, so these 20-25 dealers in the last 2 months, all of them are in the new locations for us or existing as well?
Yes, for the new areas where we want to grow.
Okay. And sir, in terms of margins, if we look at our history, so in FY21, we made 11%, but prior to that, in almost every year, our margins have ranged between 5 to 8%. I'm talking about EBITDA margin. And now again in FY22, in 2 out of the 3 quarters, we are back to 8%. So can you help us understand whether FY21 11% was a abnormal year, bonus year for us, and our true margins are around 8%, or how is it? If you can help us understand it.
Sushil, I'll explain it to you. One, I've been making statements that in an agriculture business, 2 quarters you have very good and 2 quarters are off-season times. So aggregate margins will come down because 2 quarters will you do well and 2 quarters you will not do that good. And that is why the company is expanding into new areas which have 9 months to 10 months business cycle. And that is what will automatically lift our EBITDA margins above the earlier projected margins we have had. Number 2, this year, unfortunately, because of the downward price revision, both are reflected in our Q1 and Q3 numbers because of the prices of raw materials going drastically down. So there is a definitely inventory loss in both the cases. So this is what is affecting. Otherwise, if you see in the peak season, our margins are much better, and industry average is at about 16 to 17%. And when we are selling our products at premium at prices which are accepted by our customers, equivalent to any other known brand, national brands, so our normal case margins should be within those brackets what others reflect in their business. Because our processing costs, our efficiencies, our plant capacities are aligned with any of them. So in this situation, we are confident that our margins will show similar trend with most of the bigger or national players.
Understood. So sir, basically you are saying margins in this year, our margins are upwards of 10-11% is what you are indicating, correct?
Yes.
So can you help us understand, so what happened from the last year onwards? So this year you explained that margins should have been higher, but they are not, which is okay. But if we look at our history up until FY20, our margins have never touched 10%. But in FY21 they were 11, and now you are again expecting them to be upwards of 10%. So why were we not able to make those kind of margins prior to FY21, and what happened from FY21? What changed?
So, very important question you have asked me, and the question I would like to again respond. You see, if you see before that we were totally agriculture based. And in agriculture pipes, you have main season beginning April to June and again October to December. And the 2 lean months, which are between July, August, September or January, February, March, like rather 15th December onwards till 15th of March, they were very low capacity utilization months. So they will erode your overall margin, which are reflected in the year end. That was the trend before. That's why company focused on developing building product or submersible, that is column pipes and other products. And since we are now getting quite well entrenched in these products, in our areas of dominant position, we are already getting a good business response. Our plant utilization across the year is improving. And when plant utilization improves, your overall average margin of the year will improve considerably. So this is what is reflected in our business performance.
So what was the building products revenue mix in FY20?
Again, say it again, sir.
What was the building products revenues in FY20?
FY20 building product revenue. 1 second.
FY20 or 21?
FY20. I don't have figure. Can I get back to you with the numbers? Shashank, can you note down?
Sure. Yeah, sure. I'll get it that with the Valorum guys for that.
Yeah.
Understood, sir. So I'll get back in with you. Thank you so much.
Thank you.
Thank you, sir. Next question comes from Dheeraj Mehta from Equirus PMC. Please go ahead.
Yeah, hi, sir. Sir, what I wanted to understand was two things. One, if we look at our decline in terms of volumes compared to even our competitors who are only in agri segment, the drop in volume seems to be far steeper for us at 55% compared to our competitors. Would you please care to elaborate on that?
You see, I had explained it earlier, and I'll again repeat that our own sales, when I look state to state, the decline in the major areas where we operate, that is Madhya Pradesh, Rajasthan, and Eastern Maharashtra, is far steeper to other territories where we sell our agri products, because probably rain pattern in these territories were of a different nature. This is what we feel as compared to other territories. Number two, most of the other pillar has a stronger presence in building products along with agri sector. We were more or less on agri sector, so their businesses must have been impacted to a significant extent in agri sector as compared to building material sector. So that is what is our view as far as the market is concerned.
Our agri sector only, sir, because agri sector people, let's say the largest player, Phenolics, decline was 30%. For us, it is 55%.
Right.
In the volumes, like to like, peer to peer.
Yes.
If you look at Supreme agri business, and I'm only talking specific agri business. Agri business decline was 27-28%, which is why we are one of reasonably large shareholders of the firm, and we are concerned that that our share compared to our peers is falling dramatically. That's our only concern. Happy to understand from you.
Yeah, I'll explain it to you again. You see, our share, as we see in Madhya Pradesh or Rajasthan or Maharashtra, where we are operating, has not reduced, but rather it has improved in last quarter, because these areas were maximum impacted by continuous rains in these territories. So certainly those players who have a larger geographical spread in terms of business market, they were less impacted, because our sales in Telangana or Andhra Pradesh have not gone down to the extent it has gone down in Madhya Pradesh or Rajasthan for that matter. So what we are seeing is geographical spread wise, the impact is different.
Sure. So then let's say next year, when some of these regions become normal, your Rajasthan, your Madhya Pradesh becomes normal, and growth there on a very low base is far higher, then we should outdo the peers in terms of growth in FY23. Is that then a fair assessment to have?
I think you are absolutely, there should be a guidance from you as an investor to us as management that this is what we should look for.
Okay, sir. I look forward to interacting with you. Thank
Sure.
you so much.
Thank you
best
for
of
the
luck, sir.
guidance. Thank you for the guidance.
Thank you, sir. Next question comes from Beena Gokulani from SR Investment. Please go ahead.
Good morning, sir. So my question is that, the anticipated sales value for FY24 was 1,200 crores, according to the past two conference calls. So do we stick to the same vision? And also, how does the company intend to reach this target in the following two fiscal years?
As far as company's position is concerned, we still feel and our plans are there in place, but the kind of disruptions we have seen in two quarters, quarter one and quarter three, is something what we would like to even observe more closely before we comment, because talking something and not delivering is not the way we should do. So I would still hold, give me a quarter more to really analyze and come back to the investors on what kind of a projection we should give. Because we have maintained that our plans are for 1,200 crores, but what we have performed is not as per that number. So we have to be very clear before we comment. We should circumscribe all our plans into a very tangible and actionable agenda and come back to you. So would you like to give me a quarter more to come back to you on this?
Yeah, sure. But I also had one more question that to reach this target, do you have any advertisement plans, or how is the company targeting to increase its market share in each state from the major brands?
We have already rolled out a complete marketing plan, and as I have been maintaining, we are more aggressive on BTL activities as compared to ATL activities. But it doesn't mean that ATL will be totally ruled out, but the significant portion will be on BTL activities as compared to ATL activities, and which is already underway. We are working full time on that. There were certain COVID-related disruptions in last 2 months, but as now COVID is coming down, we are quite sure that once we are allowed, we'll be able to move in all the market segments as per our plan.
Okay. So one last question, that how are we planning to match our margins with the industry players? And what is the expectation for the building products? Can the demand pick up, or do we expect a better performance in building products in Q4?
Q1 of 2022-23 will be the first quarter where we will see our production fully ready and commissioned. So it is in the month of April that all the commissioning will happen. So actual impact you will see only from Q1, and it will mature Q2, Q3 onwards. So building product impact will be seen from the Q1 of financial year 22-23. Have I answered your question? There was one more question you had.
Yes, there was one more about the EBITDA margin, that how would we match
as
up
I
with...
was explaining earlier, as our plant's utilization is for 8 to 9 months more on a positive side, you will see automatically EBITDA margins will go up, because as I was explaining, our all other cost structures are in place which are as per industry norms, and there is no reason that we should not be aligned with industry EBITDA margins.
Sure, sir. Thank you so much.
Yeah.
Thank you, ma'am. We have a follow-up question comes from Ankit Gupta from Bamboo Capital. Please go ahead.
Sure. Thanks for the opportunity again. Normally, what we have seen is in case of increasing the PVC prices, the market share of unorganized players has inched up. Has that also happened in our areas over the past 3 to 4 quarters, that the market share of unorganized players has increased?
No, I would say unorganized players' market share has decreased. The organized players' market share is increasing. This is what we see. Because one, the customer is becoming more quality conscious at these prices than he was before, because he's putting his extra money to buy product, one. Number two, for unorganized player to maintain business line in such volatile and shortage situation is difficult, because you have to be far more organized to ensure that supply chains are managed better.
Okay, because what we were hearing is unorganized players use low quality PVC and reduce the prices to attract farmers during such times?
You see, normally I have seen that the farmer is also becoming very discerning and quality conscious.
Okay. Sir, on the building product side for CPVC segment, what are our plans to scale up CPVC side of the building product segments, and how do we plan to grow this segment over the next 2-3 years?
So when you sell building material, CPVC is part of the product range you offer. So we are augmenting our CPVC extrusion capacities and molding capacities because that will be required.
Sure. And we have been hearing about the shortage of CPVC resins from the building product companies. So have we tied up with any of the suppliers for that, or from where do we plan to?
No, we are still in the process, as I told you earlier also, that we are in discussion with 2, 3, 4 suppliers, and we are working on the supply chain side of it. We are confident we'll be able to do it because we are well entrenched in PVC side, where we have regular contacts with most of the international manufacturers.
Sure. Okay. Thank you, sir, and wish you all the best.
Thank you so much.
Thank you, sir. We have a follow-up question comes from Rahul Jain from Kriti Industries. Please go ahead.
Thanks for the opportunity. Sir, with regards to the industrial solution side, 2 years back, somewhere we had consciously decided to, because of liquidity issues at the customer end, we had consciously decided to go, slow on that particular segment. And so as we speak today, how do we look at this segment now? Are those liquidity issues behind? Is that being addressed by, say, some kind of channel financing? Is that possible in this particular segment? Some kind of financing arrangements which can help this particular segment, because there is some activity going on with regards to the capex on the industrial side.
No, as I had said earlier, I still maintain same. We as a company are still not confident about the overall scenario in industrial supply segment because of the general working capital cycles which are involved in payments and supplies. One. Number two, we cannot compete with the prices of many organized sector, particularly in water segment, where the prices offered to customer are so low, which we will not like to really compromise on product or business ways of doing things. So we will still maintain a guarded approach to building, industrial supplies.
Sure. And sir, with regards to the building products, you mentioned that, capex will be through in next 3 months. You will add a probably complete of products will be there. You are also pushing on the sales side. Some ballpark figure, say 6 months from now, when our capacity comes on stream, say in April, May, June, what kind of incremental sales capacity, sales team or distribution team you are adding, and are they being added in and geographically wise, how the planning is being done? If you could share some details on that side, sir.
So we have already appointed many places our sales people, which includes the territories we want to grow, including, I can say, Andhra Pradesh, Gujarat, Karnataka, UP, Punjab. Because building products, we will have to create a whole network which is able to continuously feed as well as business manufacturing capacity. So this is where we have planned it in a way whereby we are already in a process of appointing dealers, and we have already appointed, as I was telling, some dealers, and by end of March we would have ready with our network by the time we'll commission our manufacturing capacity.
And sir, this will be completely exclusively building products dealers. Is that correct?
You see, primarily they'll be building product, but some of them, if they want ready to distribute agriculture products also, we will not limit that. But the primary focus will be building material, because building material is something where we want to focus to give our business 9 months plant load of adequate capacity utilization.
Sure. So last one, with regards to some additional products in building product segment, like the exhibit pipes or column or the casing. So are these products being added now? And do you see a large potential in some of these products which can probably accelerate the growth in building?
We have already developed many of the range in segment of column pipe or blue casing pipes. So we are already at it at the regular. That's what I said, that all these ranges will be ready by first quarter of financial year 22-23.
Thank you so much, sir, and again, best wishes.
Thank you, sir. Thank you so much.
Thank you, sir. We have a follow-up question from Rajat Sethia from iThought. Please go ahead.
Thanks for the follow-up opportunity. Sir, in terms of our finance cost, for the 9 months, it is around 10 crores. Can you break it up into what is the fund-based related, cost here, and what is the non-fund-based finance cost here?
Finance cost in terms of 10 crores division.
For the
non-fund based, when you're talking, then you are referring to the LCs which are used for the purpose of procurement of raw material, either indigenous raw material or imported raw material. So these LCs are also discounted and the payment is made to the suppliers immediately. So that also becomes basically a funded utility. So I cannot give you any exact breakup, but I can give you the breakup of the working capital limits. We have around 50 crore rupees fund-based limits and around 180 crore rupees non-fund-based limits. So it's a total, working capital figure of 230 crore rupees, which is sufficient for achieving our target numbers for FY23.
Okay. And what is the cost of debt for our fund base?
This company working capital loans are within the range of 7.5% to 8% maximum. And the letter of credit which we are using for the purpose of procurement, we are getting it at 4.5%, which is definitely a very cheap and effective rate.
2.5%?
4.5%. The LC discounting rate we are paying to the bank. Yeah.
Okay, understood. And sir, over the next 2 to 3 years, what kind of revenue mix do you envisage for different segments?
Actually, this question was asked to me, and in last couple of quarters, we had maintained that 2024, we are maintaining an outlook of 1,200 crores. But I said I like to qualify this statement after observing for one more quarter, and that's what I had requested in earlier question. That since we had made these statements and looking to what we have done in quarter 1 and quarter 3 this year, I like to once again go back to and observe for at least a quarter more and then come back to you on this.
Okay. All right, sir. Okay, sir. Thank you so much.
Thank you.
Thank you, sir. We have a follow-up question from Davanil Desai from Turtle Capital. Please go ahead.
Hi, sir. Thanks for the opportunity again. Sir, are you witnessing any challenges on the demand side because of the latest COVID wave in last one and a half months?
No, latest COVID wave, we had seen the challenge in the first quarter, not in Q3 is because of COVID. Because most of the markets were open. This time dealers were active. Q1 dealers were inactive. They had, withdrawn themselves into shelves. But this time that was not seen. This time there was a lack of demand on part of a customer or a trading channel partner who would stock his product in anticipation of falling prices. So because of probably rains and continuous regular rains, the irrigation requirement in the other areas of major focus were not there, because every time there was a need for irrigation, there was a rain, and a good rain, continuously 4 days, 5 days, 6 days. So there was a demand destruction on the side of a customer rather than. That's how I look at it.
The third wave has no impact as such on our business.
Can you repeat it again, please? I couldn't get it.
The third wave has no impact on us.
I don't see an impact on third wave on the overall business operation.
Okay. And sir, you talked about that in some of the states the decline is much less, barring MP and Rajasthan. So can you give us some sense into other larger states? So MP and Rajasthan are quite large for us. But let's say Maharashtra, what was the decline? And does it also mean that MP and Rajasthan decline was far steeper than 50%? Is that a right assessment?
Yes, exactly. What you have hit the point. Like if I go to a southern state, I had achieved almost 75 to 80% of my targets. But when I look at the major states where I am operating, we were, here also region to region there will be slight difference, but we were on an average around 50% of our target. So if I go to some of the Maharashtra areas, the decline was about 40% to 35%.
Okay. And sir, last question, you talked about inventory losses in Q1 and Q3. Can you quantify the loss in Q3, inventory loss?
It will be difficult to quantify because, it's an ongoing price erosion on the raw material side as well as on the finished good inventory side. I'll have to really calculate to figure out because you are selling every day continuously and you are also under contract of buying or imported material which is arriving, which was contracted earlier and which arrived later. So, normally a cycle of supply chain cycle is last based on whether it's a domestically procured or internationally procured from various routes. So we'll have to work out some figure on that.
Okay. And sir, what if the PVC resin prices keeps on going down and kind of goes down to the normalized level of $1,000-$1,100? Can that result into further destocking, demand destruction for us? What is your assessment?
You see, if prices come down to $1,100, the demand would be really, farmer will be very comfortable because he has seen price level of $1,700, $1,800 plus. $1,900 were the prices ruling some time back. So that is for sure. But looking to current international positions, the price decline to that extent looks very difficult now.
Okay.
Like in last couple of days, you must have seen that again the prices started moving up because of many reasons.
Okay. Got it. Thanks. That's it from my side. All the best.
Thank you.
Thank you, sir. Next question comes from Aditya Kandelwal from SIMPL. Please go ahead.
Sir, hi. Thanks for the opportunity. Just wanted to understand, have you seen some restocking in the month of January and can we expect at least sequential increase in the volumes?
I personally would like to respond to this question by saying that everyone is apprehensive watching with a very, very raised antennas because they have seen so much of volatility in last 24 months that people are quite careful. One. Number two, there is definitely restocking happening in the month of January, what we have seen, because the sales are, the dealers are demanding for product as compared to what they were doing earlier. So there is a restocking going on, maybe because one, there is a demand and the stocks have come down. Number two, there is anticipation of price increase, which was being talked about in the air, in the sense on the environment that there is a likely price increase in the resin now. So this is where both the things are getting in terms of sales are reflecting the demand, which is improving.
Okay, sir. Thank you.
Thank you, sir. There are no further questions. Now I hand over the floor to the management for the closing comments.
I would like to thank all participants in this earnings call. I hope we have been able to answer your questions to your satisfaction. If you have any further questions or would like to know more about our company or our current businesses, please reach out to Investor Relations Manager of Advalorem Advisors. I would once again like to thank you, and please stay safe and stay healthy. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Aditya Birla Money, this concludes the conference call for today. Thank you for your participation and for using Doosabas conference call service. You may disconnect your lines now. Thank you and have a pleasant day.
Thank you.
Thank you.